Greetings, members, one and all of the Salivation Nation. The gold to silver ratio finally has dropped below 100. Let's explore! Yes, indeed, eyeing fresh 2.5-month lows. It's exciting to see the gold to silver ratio finally drop from the simple moving average. In fact, as of the recording of this video, we're looking at this here. It looks like that the gold to silver ratio is definitely below 100, but not by a whole lot. This article here from FX Street discusses this. And gold to silver ratio, which indicates how much silver can be bought for 1 ounce of gold, has declined below its 100-day simple moving average of 101.24. It could soon set fresh 2.5-month lows under the May 20 low of 99.5. The ratio hit a high of 126.56 on March 18th. Wow. I didn't realize that. I knew it had got up to 124, but I didn't realize that it had peaked there at 126.56. Pretty amazing. Never before have we seen this in history. In fact, I did post a video about it that talks about how this has not happened in 5,000 years. But admittedly, in looking through that video, it was hard to kind of really measure that from that far ago, for sure. It has declined from 115.35 to 100 in the last 3 weeks, courtesy of the sharp rise in silver prices. The white metal picked up a strong bid below $15 on May 7th and rose to a high of $17.63 on the 20th of May. Gold, too, witnessed a rally from $1,680 to $1,765 during that time frame. However, in percentage terms, silver rallied 17.5%, outshining gold's 5% gain by a big margin and pushing the gold to silver ratio lower. Now keep in mind, even at 100 to 1 or just below it, the two metals are really out of whack with each other in terms of what a normal gold to silver ratio is. What is that normal? Well, most believe it's somewhere between 50 and 60 to 1. Nowhere near the 15 to 1 that some think it should be, or what the metals are pulled out of the ground at a ratio of 9 to 10 to 1. Looking forward, both precious metals could continue to benefit from the escalating U.S.-China tensions and the global economic pain brought on by the coronavirus pandemic. Optimism over easing of lockdowns across major nations could provide an additional boost to silver, the semi-precious metal, semi-industrial metal. The gold to silver ratios decline below the widely tracked 100-day SMA is also echoing similar sentiments. And gold is currently trading at $17.32 per ounce, representing a 0.3% gain on the day. And silver is trading up. Actually, we'll take a look at what the metals are doing right now in a moment. But this article here from Kitco talks about how gold is a little bit under pressure and silver and platinum are moving higher. It says that gold is under pressure this morning and in danger of breaking a key support level. It appears that the big seller is still there, as we saw on Monday, with just the electronic market trading. We are long expecting a bounce from here. However, we know that the pattern and the algorithm can change, and they did change today to a point. Silver and platinum have become more bullish based on the price action than gold. We are long all three, but know that they can also separate and go in opposite directions. Platinum and silver hold key support last week and continue to move higher. We expect silver to test $18 in the July futures and platinum $9.50 in the July futures. The bottom line remains the same. The metals look strong, although they have rotated to key support levels only to bounce and run to new highs. This is the power of price action, which eliminates emotions and keeps you in a position longer without guessing, but with a more mathematical certainty. But although we can't discount emotions, we really can't. Price action does work to a point, but psychology plays a big role, which can wipe away mathematical certainty for sure. We know there are no guarantees, and he says that, but it's always better to be on the right side of the market, offering a comprehensive report about the services there. So you can see here is where gold is, 1725 there, from Barbara Horowitz. But what are the movements in the metals? They're all down today. So fresh this year, we can see that they're down with silver only losing 1 cent on the day, which is why we were able to preserve that gold to silver ratio below 100. But gold took almost a percentage point drop to 1713, $1,713.20 to be precise. And but that's still above $1,700, and that's good for gold. But it is taking a little bigger of a hit there. And platinum took an even larger hit with almost a 2% decline in price. Platinum did. And palladium took an even larger hit with a negative 1.67%. $32 there. Actually, platinum took the biggest hit of all between those two metals. But why did this happen? Well, because of more talks about vaccines, and with one company in particular saying that they're getting much closer, and they feel like they will have something before the end of the year. Now, will it be an actual vaccine? I don't know. The whole world is working on this, multiple companies. And of course, as is always the case whenever I talk about this, the coronavirus things, with more things opening up, Governor Cuomo from New York rang the bell. The stock exchange is open again for trading with social distancing measures in place. However, that premise where basically the economy is starting to open up again and people vacationing and getting out and about, people are itching to get moving again, which gives some credence to the possibility that we may see a quicker recovery than some have said would not happen, because people want to get back to normal. There was no reason to be in an economic decline before in terms of the general populace. Now, we have to discount what the Fed has been doing before the coronavirus epidemic with the repos, with the printing of money going out of style, and with the inversion yield curves and bond yield curves and all that stuff. Seems like so long ago, but that was in the news before all of this happened. The inversion of the bond yield curve, which predicted a recession. Now, obviously, we do have a recession for a specific reason. That we're in it right now. I still think it's going to take a while to pull out of this, but the sentiment of the populace wanting to get back out and about again, when some people are saying, well, they're not being careful, they're not wearing masks and the like, but there's certain things that that can be done, and whatever your feeling is about masks, that's another subject that can be discussed. And as far as the whole thing with how this thing has occurred, and what the repercussions will be, the fact is the economy is opening, at least at some level. The phasing in is occurring right now. And so we are probably over, at least to the most part, of closures. We're getting to the point where hopefully by July 1, the economy will be fully functioning again in terms of businesses being open again. That's what I'm talking about. As far as how they conduct their business, with safety measures in place, with social distancing, with all kinds of things like that, that is something that will be occurring, I'm sure, in many different levels. And I'm sure that some people will still stay home, and they won't get the full force of business opening up again. And obviously, some people and some businesses are going to be statistics of this, unfortunately, and they're going to be casualties of this coronavirus war. But nonetheless, I believe the overall sentiment is that people want the economy to get back in action again, and I think it will. I do think it'll take a little bit longer yet, but there's some hope out there, and the stock market is showing that, although, admittedly, as we all know, the Fed has been pumping money into the stock market, and so that's basically the foundation of it. But on top of that, other people are too. So I think that's the one thing to kind of keep into consideration here, and that has having an effect on metals, and they're starting to decline, but only just a little bit. It's a very slight decline in the metals prices overall. But what's good for silver is that ratio, that it is there. It is just right almost at 100 to 1 right now, 99.82. Went up just a little bit during the recording of this video, the gold to silver ratio. And so we'll see how it all plays out. It is fascinating to see, but in the end, we do what we know, and we protect ourselves against whatever happens economically, and the metals do that too. And but generally, I think everybody wants the economy to do well. We need to see jobs come back, and I feel for everybody who's lost jobs, and I feel for anybody who's been sick from this virus or lost a loved one from this virus. So there you have it. Continue to be safe out there, no matter what you do, practice all of the CDC guidelines, but yet participate in the economy. Just do it in a safe measure. So there you have it. Post your thoughts below. I would like to extend a multitude of gratitude to you all for taking the time to watch this video, and encourage you to please rate, share, comment, and subscribe.